How do you sell or buy an Amazon business? Today, we talk to an expert broker who will shed light on this question. I'm Stephen Pope, and this is the My Amazon Guy podcast. So I'm now joined by Mark Dauost. Did I say that right?
You said that right. Yeah.
Very good. Founder and CEO of Quiet Light Brokerage. Thank you so much for joining me today.
Hey, thanks for having me on.
So I'm really excited to talk to Mark. For my own listeners' sake, I have a lot of people in my network that have good things to say about the Quiet Light Brokerage. And so with that in mind today, we're going to ask for Mark's expertise, and he's going to try and add value to you guys as our listeners to answer these questions about how to buy and sell an Amazon business. So Mark, let's spend a couple minutes on buying, and then we're going to breeze through that, and then we're going to go into the selling. I want to spend most of the time talking about selling. So if you're looking to buy a business, what are the couple of key things people need to think through?
Well, great question. And again, thanks for having me on. Super excited to be on the show here. So a few things to think about before buying is one, what exactly do you want to buy? I mean, saying you want to buy an Amazon business is kind of like saying I want to buy a car. Well, what type of car do you want to buy? What's your budget? You know, are you looking for a massive 14-passenger van like I have to have because I have a bunch of kids, or do you need, just a little thing that's going to get you to and from work? So first, we need to talk about what type of business do you want, and then second of all, I think what comes from that discussion is an analysis of where are your strengths, so that you can identify what sort of business you want to buy. I'm a big believer in identifying businesses that are weak in certain areas where you have strengths, because that's where you have the best play and the best return on investment.
Can you give me an example on that one?
Yeah, oh, absolutely. So if you are really good at vendor negotiations, or you're really good at logistics and being able to streamline processes, or if you're really good at Amazon listing management and can, that you can win more of that buy box, these are all areas where we see people take advantage of that. I actually just got an email from a gentleman. I sold his business last summer. And he asked, do you have any smaller Amazon businesses that are just kind of starting off and are doing a subpar job with their listing management on Amazon? Because he knows from his experience, he's really good at that. And for him to buy a business like that, he can pay a regular price, but he's going to be able to grow it and get a really quick return on investment. And then someday be able to sell that for a much higher amount of money if that's what he chooses to do. The other examples would be, just optimization in terms of logistics or freight or sourcing. I also completed a deal last year personally in which the company who acquired the business knew a lot of manufacturers within that exact same space and was already manufacturing items within that space at scale. And so buying this business immediately represented a huge cost savings to the products that were being produced, right? So by doing this acquisition for them, they were paying a certain multiple, but their return on investment was going to be immediately higher because they were going to introduce savings from day one. So that's another strength. For most entrepreneurs listening, you probably don't have huge manufacturing facilities. So I think know what your strengths are, and then you can start to look for a business in that area as well. My strengths are, I'm not actually good at e-commerce personally. as an entrepreneur, I'm really good at service-based businesses or identifying needs of customers. And so I would be looking for a business that might be a little bit more tone deaf, frankly, or might not have the best product market fit. That would be more what I personally would look for. So that's what I mean by that.
So some entrepreneurs are probably thinking to themselves, why would I buy a business versus just start one from scratch? What would you say to that?
I would say go read the book Buy Then Build. And it's a little self-promotional. Walker Diable, who works on our team at Quiet Light, is the author of that book. But he goes exactly into that topic. My reasons for it are pretty simple. The businesses that you're buying they're established. They've already demonstrated some level of product market fit. They typically have some momentum already going behind them. They are immediately profitable, as opposed to starting a business, which can take a long time to be profitable on. And they're just further along in that maturation phase with a much lower failure rate than starting a business. That doesn't mean that there isn't a place to start a business. There is definitely places to start a business. But if you're looking for something a little bit more immediate, buying a business, hands down, is the better way to go.
Great. And last question on the buying side, what's the most important thing to avoid or mistake that commonly is made that somebody needs to think through?
Boy, most common would be difficult. There's a lot of things to look for. On Amazon, I think product protection and intellectual property protection is paramount. And that's the first thing that I look at when I'm evaluating an online business or an Amazon business from a brokerage standpoint. I want to see, have they protected themselves from competition? Just because I've seen so many businesses get destroyed because they haven't done that. Maybe their product isn't distinct enough, and so it's a lot easier for copycats to come in and completely dilute the marketplace. Or if you don't have any rights to a property or to a product, then it's a price battle, and no one wants to play that sort of game. So the first thing that I would say for buyers, or the biggest mistake to avoid, would be not taking a look at the intellectual property protection or any protections from competition.
Great. The rest of our podcast, we're going to talk about selling, because most people who are listening to this already have a business. And, there's a couple of common ways businesses end, right? They could go under. You could gift it to somebody, maybe inherit it to the next kid in your family, right? Or if you're talking about brokerages and Quiet Light Brokerage, you're going to sell. So let's talk about selling a business, and can you tell us a little bit of background about Quiet Light Brokerage and how often you guys are selling businesses and that kind of thing? Let's talk background, and then let's go into the meat and potatoes.
Yeah, I mean, our background started in just the regular website days, right? If you look through some of our old content, we have a ton of content on our site. If you look through some of the old content, you'll see us reference website valuations and sell your website, because that's really our genesis. 2007 is when I started Quiet Light Brokerage. And that's essentially what was out there, were a lot of profitable websites as opposed to online businesses, which are now multi-channel, have a lot more complexity to them. And, even non-e-commerce businesses, will have apps associated with them besides just the website themselves. So that was the original genesis. Today, where we're at is we do a lot of e-commerce. Right around 70% for the past 12 months has been e-commerce. And frankly, if it's e-commerce, it's Amazon. It's pretty rare that we get something that doesn't have at least an Amazon component to it. So a really heavy Amazon bias on that. Last year, we did around $70 million in transactions on behalf of our clients. And I believe that was like 63 or maybe 65 deals that we did. We're on pace to do about the same number of deals. I believe we'll probably actually surpass $100 million on those transactions, but these are really made up of a couple of elephants, right? That if those
Sure.
close, they change our numbers pretty dramatically. A couple of deals in the $20 to $30 million range, which I feel good about, but it's so easy for these deals to fall apart, especially at that price range.
I think Amazon is entering the maturity phase. This is a topic I speak frequently on, and I predict that there's going to be some sophisticated sellers on Amazon that are going to go out and buy other sellers and bring them in-house. Is this a trend that you're seeing?
Absolutely. In fact, we've been talking about this recently, Joe and I, my business partner with Quiet Light, that it seems like every week we get another email from a fund that has raised money, gone through a round. I just responded to this morning. Somebody sent me a message saying we just went through our first round of funding, raised $12 million to buy FBA businesses. That is their thesis. That is their goal. That is what they're doing. We've seen this infiltration of private equity or PE light, as these micro funds bubbling up over the past several years. And it's only been increasing as far as the number that are doing it. Now, not all are doing it well. We've seen some fail, but there are now a few examples of companies that have come out and have made a go of buying up multiple Amazon businesses and buying them at scale. Outside of that alone, you have individual successful sellers as well that are doing the same thing. Just like I mentioned earlier, how a client that I sold his business last year, he's a really experienced operator. And so for him to come in, for him to own 3 businesses, he has nothing right now that I know of. For him to own 3 Amazon accounts would make complete sense. He knows what he's doing. He can do that and do it very, very well and very competently. So that's we have the funds that might want to pick up 40 or 50 of these. And then we have the individual buyers who could easily run 3 to 5 individually.
So if I'm ready to sell my business, what are the things I need to do? And let's say I'm ready to sell a year from now. So I can do all the prep work that you wish your best clients were going to do. let's go through the best case scenario. What are the things I need to do in the next 365 days to prep my business to sell?
I'm glad you said that because I was going to say, if you'd say, I'm ready to sell my business now, what's the first thing I should do? And it's invent a time machine and go back 12 months prior.
Very
Right.
good.
Yeah, because that prep work makes a big difference. I mean, it really makes a big difference. And oftentimes we tell people to go back and to rework some aspects of their business. Um, Look, there's four areas that we talk about all the time at Quiet Light Brokerage when it comes to influencing the value of your online business. We call them the four pillars of value, pretty easy to remember. They're risk, growth, transferability, and documentation. Um, if you're 12 months out, the first thing that I would focus on, frankly, would be the documentation. I mean, you can go through all four pillars pretty quickly and identify things that are going to take some time, but documentation it's such an easy thing for you to do and has a significant impact on the value of your business if you have good documentation. And there's no reason simply to not do really well there. So what's included in that? Well, it starts with your financials, getting your financials in order. If you are running an Amazon business, you should have good, clean accounting records recorded. That doesn't mean filed, but recorded on an accrual basis. And if you don't know what the difference is between accrual accounting and cash basis accounting, you need to learn what it is, right? So this is a really important difference as far as how you keep your books. The teaser to this, as to why this is important, we've seen valuations of businesses fluctuate by literally hundreds of thousands of dollars when somebody makes that switch from cash basis to accrual basis accounting. I don't want to bore people with accounting talk, so I'll just say this. Accrual accounting just takes a much fuller picture of your business in terms of the assets and the value of that business. And it's able to more fully capture the value of your business as opposed to cash basis accounting. So that's the first thing that you need to do. The reason I put that 12 months out is if you're not doing cash basis accounting, it's kind of hard to go back and redo it. Going backwards, it certainly can be done, and we do it all the time. But it's easier if you just start 12 months prior and start doing that. If you aren't doing it, if your bookkeeper's not doing it, have them start doing it today and recording it on a monthly basis. There's a lot of bookkeepers out there that want to make a year-end adjustment, just to have it done on a monthly basis. Am I boring your audience yet?
I think that these things are super valuable. Sure, if you got some accounting jokes, throw them in. But but I think these are necessary things. Like, this is real talk. Authentic conversation about, hey, if you don't have documents in a row, don't think about selling yet. Get the documents in a row first. So risk, growth, transferability, documentation. So let's just briefly touch base on them. So what would be a big risk?
Yeah, big risks. So big risks would be that intellectual property protection would be one area that I would look at. But when I look at risk, what I'm looking at primarily are what are areas of your business, perceived or real? Because for a buyer, it doesn't matter, right? It can be a perceived risk, and that's as real as a real risk to them. So areas of your business, perceived or real, which threaten the future of that business. So that could be the fact that you have one SKU that's doing 60% of sales, right? And that SKU is in very fad-like territory. Maybe you're selling a keto diet supplement, right? Well, who knows if keto is going to continue on as being the latest fad? Maybe something else comes up that variates on keto.
Especially if you get like a 2-year life cycle of a product on Amazon and you're at the end of 2 years and it's your only SKU, yeah, you get a problem.
Yeah, exactly. SKU concentration, vendor concentration are major issues.
What about like marketplace concentration too?
Great question. It used to be much more of an issue than it is now, but I think I agree with you. I think Amazon is maturing enough where a lot more people are looking at Amazon favorably, and we're seeing a lot more buyers in that space that really like Amazon businesses. There used to be a lot of suspicion about Amazon, and I look at your audience is probably saying, I still suspect Amazon. I'm still sure
Amazon just wants to help buyers. They don't help sellers, which is why I'm in business, right? So I get it.
Yeah, I mean, it's natural to be skeptical of Amazon to an extent, but I think it's also fair to say Amazon is building FBA into their core pillars as far as where the revenue is generated from.
Tap the economy, if nothing else. So
exactly, and it's growing. It's only growing, and FBA is not going anywhere. Now the program might change, and so that obviously runs some sort of risk, but it's just less of a risk than what we've seen in the past.
Got it. So I always try and tell people, go get your Etsy, go get your Walmart, your eBay up, and your Shopify site. Get those things in place. That way, if Amazon suspends you you got somewhere to pivot, right?
I'm not a
So
fan of Etsy. They don't. Etsy is one of the accounts that does not transfer.
transferability issues, I suspect, yeah.
Yeah.
But it's a easy platform to launch on, in my opinion. So may not be one you want to sell. Maybe that one you just cut off the deal. But I understand where you're coming from.
Etsy is a great marketplace for somebody who wants to build something up and get it going, especially product market fit. Great place to go for that. So I totally agree with you there. But if you're planning to sell it, lots of hurdles. We actually don't do it. We won't touch it just because it's too problematic
Interesting.
to do that. So those are risks.
So well, we started talking about transferability. Let's keep going there. So Etsy, word of caution, got it. What other transferability issues could be a challenge?
Right. So sometimes vendors become a transferability issue. They won't work with somebody else, or maybe you have a really good personal relationship with that vendor. That can be a potential problem where the new owner doesn't work as well with them. Licensing issues. If you have to have certain licenses to be able to sell an item, can be a potential transferability issue. But the biggest one is really just the knowledge base that's in your head. Right? As an owner, you've lived your business for years before you go to sell it. And that buyer wants to download all that information into their own head. The easier you make that for them, the more sellable your business is going to be. The selling process, a big part of it is about reducing the perceived risk on the part of buyers. And where buyers don't have answers to questions, what do they see? They see potential risk. So if you're able to document your business very, very well, now we're going to that fourth pillar again. They play together here pretty
They all connect. I get it.
Yeah, we got risk, transferability, documentation, all three here combined. If you spend time documenting your business, your standard operating procedures, diagram out all the vendors that you deal with, and not only people you're buying things from, but the service vendors as well, all the different SaaS products that you use. Put it, take it 2 hours on Lucidchart and diagram this out. It's really useful for yourself. You're actually going to look at it and be surprised. I've done this a few times, even with Quiet Light, and it's always enlightening to see what you're doing, where you're spending your money, where you have your human capital. Before a buyer, they can look at your business in a different way besides just the products that you're selling and have that many more questions answered. So transferability is all about making the business as easy as possible for somebody else to come in on day one and run the business. Some areas and hurdles for transferability. Boy, I think one of the hardest ones that I saw was a group. I won't say what they were selling because I never asked if I could say that, but they were manufacturing a piece of clothing. I think it was the grandfather was doing the accounting. The manufacturer lived a few blocks away from the seller. And, they had met in person several times and had gotten a pretty sweetheart deal. Fiance was running the warehouse, which was local to them, right? And just so many
A lot of
personal relationships.
family connections.
Yeah, exactly. And so, their P&L looked different because everybody was happy to do this at discounted rates and knowing that they're going to get some kickbacks in other ways. And then on top of that, who's going to transfer with the sale? No one. It was going to be a complete, tear down and rebuild job. So that was really a difficult case, and that's an example of how not to prepare your business.
Unless you want to build to hold forever.
Exactly. Which I'm a big fan of. I actually advocate that.
My agency is a build to hold. So, and by the way, that's a recent decision on my part where I'm 100% all in build to hold. Totally changes how you run your business, I might add. Now I'm thinking how do I get people to work for me for the rest of their lives? Never had to grapple with that question when I was on the corporate side. Never even crossed my mind. I was like, I'd be happy to get a 2-year employee. That'd be great. Right. So yeah, it's a very different mentality. Any words of wisdom you'd offer on build to hold?
So I'm a huge fan of build to hold, and I think a lot of the exit principles actually work in favor of build to hold as well. And my reason for this is simple. If somebody's willing to write a large check to you to buy your business, it means that they want to own it for some time.
Right.
If you make $1 million per year with your business and somebody's going to write you a check for $4 million, they're counting on growing that revenue or those earnings and also having it for at least a few years, if not more. Otherwise, it's not worth the time and the effort, and especially the money. So
it's a great tie-in. I never would have thought of it that way.
Yeah, I mean, really, most of the principles. There are some variations, and if you quiz me, I'm not going to be able to come up with them off the top of my head. But I've run into a few cases where I'm like, okay, maybe this exit principle doesn't work as well with build to hold. But the vast majority of them, we talk about identifying areas of risk, right, and mitigating those. That's just good business advice, right? That's not just selling advice. Creating standard operating procedures,
Everyone
That's
should
just
be
good
doing
business
that.
advice. Yeah, I mean, this isn't
Everybody's
having good.
lazy and they're like, I've got all these good problems to juggle, and it's like, which one do I go to first? I'm trying to focus on this one today. Yeah,
Yeah,
it's like herding cats. I get it.
yeah. I mean, having good books. This is one of my pet peeves in the entrepreneurial world, especially the online entrepreneurial world. Most of us do our books so that we can file our taxes, which is a terrible reason just to do your books, right?
Yep.
I mean, necessary, and I guess not a horrible reason, but there's a lot more data in there, right? There's a ton of data in there. I'm a big fan of fractional CFO services that will help you understand what your books mean and the different KPIs within your books that you can start tracking and trying to optimize your business. Identify things like, hey, you're leaking money over here, right? Or you ran this special year to be able to gain some traction, and you need to kind of cut this off and start taking some profit there. Right? There's a lot of detail within books that you can pull out. But I'm going to start getting my soapbox. We haven't talked about growth yet.
I know. We're gonna okay. So let's go back to the fourth pillar there, which is growth. This is probably my favorite. I'm a marketing guy. I think every business needs three things to run: finance, operations, and marketing. And growth is all about marketing, in my opinion. Sell more products to more people more often for more money. So what's your take on growth?
Yeah, so this is more when we talk about the four pillars of value, we want to talk about what is going to influence the value of your business. How can you get the most money for your business today? And growth is just that element or that pillar that we would pitch to potential buyers to say, "Hey, this business is doing $1 million in discretionary earnings right now, and Mr. Buyer, you could take this up to five. And here's how you can do this. Now, when we break this pillar apart and start to dig into it, what we're really looking for are reasonable ways to do this, because everybody can say, oh, but just add more SKUs, or
Yep.
get better at marketing, or hey, if you open up a Facebook marketing program, yeah, I mean, we've been there, we've done that. Most people have tried it. It's not as easy as it always sounds,
It's
right?
good in theory, hard in practice.
Exactly, right. So we're looking for proven paths or easy paths or realistic paths for growth, and identifying what those are and being able to put those out down on paper for what's your 1 year plan? How are you going to grow this over the next 12 months? How are you going to grow over the next 3 months, over the next 5 years? For some businesses, I'll give you an example of one that we had where they had, I believe, around 45 different products that they were selling. But they had a whole backlog of products that they were tested. They knew they were going to sell, and they knew that they could take their little unique spin that they were doing with all of their products and apply that unique spin to. Using this method, out of something like 45 products, they had one that didn't work, right? And so they had a really high success rate with this process of
That's awesome.
identifying new products. And they had a backlog of like 100 products that they were going to launch over the next 3 or 4 years. That's great. That's growth. That's built-in growth, and that's a huge appeal from a valuation standpoint. Speaking of build to hold, having a growth plan and identifying where's the low-hanging fruit, that Pareto principle of where's my easy stuff that I can do right now that's going to lead to the most growth. That's business planning 101.
All right. So we just talked about what to do to prep to sell a business, and the information was so good. We dwelled there for most of the podcast. So now let's talk about, what are some of the mistakes that people make when they go to sell a business? So you kind of touch base on a little bit of these, like, hey, make sure you got your intellectual property, don't rush it, that kind of stuff. Anything else that we need to round out on here's what to avoid?
Well, so let's just say go back and listen to the first section on the four pillars of value. And if you're doing the opposite of those, that's something to
That's the
avoid.
problem.
Yeah, right. That's the problem. So let's talk about something different that we didn't do that. And let's talk about the reasons why you should sell versus the reasons you shouldn't sell, and also the mindset of going into a sale.
That sounds good.
Because I think one mistake that people make often is they sell because they want the feather in their cap, right? They want to say, I sold a business. And I hear this oftentimes when I talk to people that are selling that want to sell for $1 million. Why a million? It's somewhat arbitrary, but it's a round number. Or I want to sell for $10 million. Now, look, on the surface, there's nothing wrong with this. And I don't object to anybody doing this. A lot of us entrepreneurs, we like to start businesses, and the idea of running something for 15 years probably doesn't appeal to you. So selling makes sense. But know what your reasons are. And if you're selling just for financial reasons, don't. I just don't think it makes sense to do so, right? Yeah, just don't. If you're selling for purely financial reasons, don't do that. If you're selling for a goal, like you want to get to this point, then you can do some reverse engineering and get there. Most people.
So let's talk a little bit about the financial reasons. What do you really mean by that? So like the motivation to hit a certain level, or so I've got money in my bank. What do you mean by financials?
Money in the bank, right? Sometimes what people see is, I make $100,000 per year with my business right now. I could sell it today for 275,000. Well, if you're making, let's say that you're making $120,000 actual cash flow coming into your pocket, right? That might feel okay over the course of a year, but when you're talking about getting a single payout of say $300,000 in 1 month compared to the 10,000 that you're getting every month, that feels like a lot of money at the time. And so we do see some people, especially on the lower end of the spectrum, as far as the total deal value, sometimes sell for that reason, right? They just want to compress all those payments into one payday, because they think financially they're going to be better off. The fact is, you'll probably be better off in the long run hanging on to that business. Financially, most businesses will make you more money by hanging on to them. Plus, you have the asset value of the business itself, which is always valuable. The way I like to think about this is a dividend stock, right? You might pay $10 for a dividend stock, so your stock is worth $10, but that is also going to pay you some money on top of that. That's what your business is. So I think I'm a fan of the holding.
It's interesting to hear the hold advice from a guy who gets paid to sell businesses. So that's when the advice is really good. So
it's amazing I'm still in business.
So if you talk to Quiet Light Brokerage, this is probably how your relationship's going to be like. And I think that's why a lot of the people in my network are so highly recommending of you. So let's keep talking about for a couple more minutes on selling businesses. So let's talk about the logistics. So I get you on the phone. I want to sell my business. What's the next step?
Yeah, the first step is always get a valuation done. All right, evaluation is more than just getting a number, and you can probably estimate the value of your business right now pretty easily. I mean, most businesses trade somewhere between 2.5 and 3.5 of a close variant on your EBITDA, right? So if you have your books in order, you can probably figure it out fairly closely. More important to that question of evaluation is what's driving the value in my business today, what's holding it back, what are buyers going to object to, and what's going to excite buyers. This is going to lay the groundwork for you as to what your options are. You might be able to go out and sell your business today. It might be something you could put on the market today and have buyers interested in. More often, what we see is some opportunities for you to optimize that business. Maybe buyers are really excited about the niche that you're in, but your SKU concentration is too high. So your exit plan is pretty simple. Start to diversify that over the next 2 or 3 years, if that's your timeline, right? So start with evaluation. It really gives you a lot of insights into your business and what it could potentially be worth versus what it's worth today. That's step number one.
Okay.
If you're going to the market right now, the next step is really preparation, and that is, and we work with people obviously in this regard, but get all the information together that we know buyers are going to need. Our goal is very simple. We want to answer buyers' questions before they can ask them, right? So standard, if you ask anyone that's worked with us on the sell side, they'll tell you about the horrors of the client interview that we put them through, which can range up to like 120 written questions. We handwrite these every single one. I mean, not with pen and paper, but we type these out each individually and don't use a template, because it's about your individual business. But we're going to sit down and we're going to take a couple hours, think deeply about your business, and ask questions that we know buyers are going to look at. We're going to kick the tires really hard. And the goal here is simple. We want to present the business to buyers and have them see the entire picture. And we also want to identify the potential tripping blocks so that when we get to those in the transaction, we already have a plan, right? We've already addressed
Sell into the objection, excuse me.
100%. Yes.
Yep.
Perfectly put. From there, it's, the process is fairly straightforward. We list the business for sale. We would anticipate, for most of our businesses, about 200 inquiries within the first couple of days of that. That usually leads to several conference calls with potential buyers, offers that are put together. And then once you find an offer that makes sense, then you enter into an exclusive relationship with that buyer. Period of 30 to 60 days of due diligence, which is probably the second hardest part outside of the preparation, and then transition planning and hopefully close. All said and done, depending on the size of the business, I think 90 days is a pretty good barometer of what most people can expect for total time from list to close.
That seems pretty reasonable, actually. I actually am surprised 90 days. That's pretty good.
Yeah, I mean, look, take it with a grain of salt because different sized businesses can take longer. I mean, if you got an 8-figure business, it's not going to be 90 days. It's going to take much longer than that, 6 months or so. But yeah, 90 days for most businesses is a pretty reasonable time frame.
All right, cool. So last question for you today. Why should I hire a broker like Quiet Light Brokerage instead of, say, Hey, my neighbor's selling a business. Let's just write a deal on the napkin.
Yeah, well, you know what? If you have somebody that's willing to pay you a good price for your business and you know the value right now, don't hire us. I mean, look, or any broker because
You're a
our fees
terrible
expensive.
salesman. You know
I
that?
know it's amazing I'm still in business. No, seriously, but broker, we should be adding more value than you would get on your own. That's going to be the first thing I say, and I will defend that and say we do. I really do think in the vast majority of cases we do. Now we've actually had situations where somebody comes to us and says, "Hey, I already had an offer. I already have an offer on the table for X," and our advice is take it, run with it. You don't need us at this point. Outside of just the money side, hopefully getting you more value for your business. It's the preparation. It's knowing how to navigate that transaction. Selling a business is stressful. It's going to be one of the hardest things that you do in your life if it's your first time going around. We've done this hundreds of times, and everyone on our team, we're entrepreneurs. We've personally done this. We personally bought, we personally sold. So we've been on both sides of that table. So we know what you're going through, and then we also have the expertise of doing these deals. So that would be the other reason is we're going to be your partner from day one until day zero when it's all said and done, and we're going to help you through it every step of the way and make it hopefully as stress-free as possible.
Mark, I think you have added tremendous value on our podcast today, and I'm really grateful for you joining.
Thanks for having me.
Well, cool. Guys, that was Mark Dauost, founder and CEO of Quiet Light Brokerage. If you're joining us from the Quiet Light Brokerage community, my name is Stephen Pope. I'm the founder of My Amazon Guy. We are a full-service Amazon agency, everything from SEO, PPC, and design, all in-house. Thank you guys for listening to the My Amazon Guy podcast today. We hope you subscribe to it and tell one other person about it. You guys have a great week. Thanks so much.